Hey, bulls and bears, welcome back to the channel. Bull, boom, bear, bust. Excuse me. I say welcome back because I missed yesterday. A little bit congested today, so please bear with me. But there's a lot of news that I really wanted to get out there and talk to you about. And when I say talk to you, I mean hopefully read your comments down in this video. But yes, 2 days ago when I put a video out, I told you I was kind of under the weather. Yesterday was boom. I really couldn't do much yesterday. Today, still kind of congested, kind of getting back on track there. But let's talk about what is going on. And we just have more hints and more clues and evidence that the economy is sliding into the abyss. Let's start with this first story. Walmart sends warning. Rising thefts at Walmart could lead to price jumps. That's the CEO. The CEO is also saying stores could close. And this is out of CNBC. Many outlets are reporting this. So this is CNBC. Walmart CEO Doug McMillon said that theft is becoming a bigger issue at stores across the U.S. First off, is anyone on this channel surprised? We've been warning you for years that when the economy gets bad, when people are in massive amounts of debt, when people can't pay their utility bills, when they can't pay their rents, all the stuff that we witnessed over the past couple of years. I mean, it's always been here, but it's really gotten bad, especially over the last couple of years. But everyone here, I think, is prepared for this. We predicted this a long time ago. Here's the thing. I wish that Walmart would just raise prices at the stores where the thefts are happening. In other words, just because thefts are happening at Walmart in Detroit and LA, I don't want my local Walmart here in San Diego to raise prices. So hopefully they'll do it just store by store, but I kind of doubt it. I kind of think it's going to be across the board type of thing with Walmart. That's how a lot of companies operate when they see losses. Insurance companies also. I called my insurance company about my car insurance. It went up for no reason. Didn't have any tickets. Didn't have any accidents. Basically, they're paying more claims throughout the state of California, so rates are going up. So it was either that or go to another company. So it's what you have to accept sometimes. The thing about retailers is, and Walmart included, is they have a lot of inventory, and they needed to reduce prices to clear a lot of that inventory. So we'll see how it goes. You know, I wish they would just hire more security. I wish some of these states and some of these cities would be less lenient on shoplifting. We see cities like San Francisco, they basically decriminalized shoplifting up to a certain amount. I'm not sure if it was $100. And just let me read it to you the way that I found it in my research here. Prop 47 reclassified theft offenses from felonies to misdemeanors, including shoplifting. It doesn't mean people can steal up to $950 in goods without consequences, but it does mean that it's just a misdemeanor. So people aren't really scared of getting caught in many cities, and you would find out that it is just certain cities and locations where you're seeing the biggest uptick in retail thefts. And, you know, of course, there's always been theft, but this is a huge uptick. I mean, when was the last time we saw a CEO come out saying, one, stores might close, two, we might have to raise our prices because of all the shoplifting and thievery from their stores? Continues here. If the problem continues, it could lead to store closures and price jumps. Stores across the U.S. are grappling with an uptick in shoplifting, is what it says here. That could mean higher prices and closed stores if the problem persists. Quote, theft is an issue. It's higher than what it has been historically, unquote. He continues, we've got safety measures, security measures that we put in place by store location. I think local law enforcement being staffed and being a good partner is part of the equation, and that's normally how we approach it. So a couple things there. We see these job openings. How many people are not taking jobs that they normally would have taken if it weren't for the danger factor, right? Who wants to work at a gas station? Who wants to work at a retail store that's being robbed? Who wants to work at a jewelry store? I wouldn't. I wouldn't want my kid working there. I wouldn't want anybody that I know or love working there. And I guess the economy's so good. We're being told the economy's so good. So if the economy's so good, is that what happens when economies are good? Is people start robbing and looting more often? Maybe. I mean, in the world we live in, that's what they want us to believe. But you and I, we don't believe that, and we're not buying the nonsense. More news here. Let's talk about job cuts. Wireless Advocate, 1,800 employees that worked inside of Costco So, when you go into Costco and they say, hey, who's your cell phone with? Who's your mobile phone company? And they try to talk you into theirs. 1,800 across the nation being laid off. I guess they're called wireless advocate. So there's a big one. So even the traffic at Costco obviously wasn't doing good enough to keep those people employed. Pepsi laying off white collar workers at their headquarters, 100 plus from Pepsi. NBC Sports, wow, laying off some people there. So there we go, just more layoffs. Layoffs seem to be increasing very dramatically. Now let's talk about home prices. Let's jump over to the housing market and the housing bubble. Already, just in 2022, I shouldn't say already because we're in December, but this year, 270,000 underwater home buyers. 270,000. So you bought a home, now you're already underwater. Now you may say that's no problem, no big deal. You can just wait it out. The home price is going to go up in the future. But this is going to be a very big lifestyle change for people that are so used to buying a home, and then you just sit around and wait, and all of a sudden you're wealthy because your home equity goes up so fast. Well, now home equity is in the negative, and the wealth effect is plunging instead of increasing. So people are going to pull back more on spending when they realize that they're underwater. That's part of it. Two, they won't be able to borrow against their homes because they won't have the equity for all these home equity lines of credit that so many people took out, and they used it to go on shopping sprees and vacations and buy vehicles, etc. People did that because the mortgage rates were so low at the time that it was actually smart in some cases to take a home equity line of credit, pay off a higher interest rate debt, one, or make purchases instead of having to pay a higher interest rate on a car loan or something like that, because the home equity line of credit interest rates were so low. Of course, that's more easily done when home prices are going up, but now just the opposite's happening. Now that brings the total underwater mortgages to 450,000. Among the 450,000 underwater borrowers, nearly 60% had mortgages that were originated in the first 9 months of 2022. And that's another thing. We haven't seen the fourth quarter numbers yet because obviously we're still in the fourth quarter. But this is just over the first 3 quarters. I shouldn't say 3 quarters. Yeah, the first 3 quarters, the first 75%, the first 9 months of 2022. What's it going to be at the end of 2023? Is it going to be in the millions? Wow. So it's about 1 in 12 homes that are purchased in 2022 that are underwater now in the mortgage. All right, let's move on here. More signs of economic strain are out there. Here's another one out of Bloomberg here just recently, December 6th, yesterday. Millions of U.S. millennials moved in with their parents this year. Bloomberg article, again, the economy was so good. Why are these millennials having to move back home? We warned about this a couple years ago. Millennials are in very, very difficult positions. Some of them just getting out of college. Look at the cost of living right now. They have to pay back their student loan debt. Well, normally they would have to pay back their student loan debt, but just getting out of college, getting your first job, with this cost of living, the home prices, the rents. And if so many millennials are moving back home, why are we still seeing rents so high? You would think that where they're leaving would open up more vacancies, and then the supply and demand would kind of take care of it, and rents would go down. We're really not seeing that. We're seeing a little bit of a seasonal dip in rents, but nothing bigger than previous seasonal dips that we've seen in previous years. So it's pretty interesting. We're going to have to keep an eye on it. We do see other reports like this one out of Bloomberg saying that millennials are living at home. And we actually talked about it, last year, that most millennials actually live at home, but apparently millions more now moved at home this year, back home with their parent. All right, let's talk about Carvana. Wow, this is a stock that's been in the business news quite a bit. During the shutdowns and health crisis panic, Carvana was a high-flying stock. People couldn't go to dealers, and if they could, they didn't want to in some cases because of the fear of the health crisis there, the fear of the sickness. So Carvana naturally took off. Went from a little over $20 in 2018 to a high, of $360 August 2021. So just over a year ago, $360. Well, the stock has plunged over 90%, and there were dip buyers. People were buying the dip. They said, wow, what a buying opportunity. This stock crashed down so low. So over the past month, we've seen Carvana in a range between about $7 and $8. Just today, December 7th, today, the stock crashed. Let's take a look here, from $8 to $3.83. Wow. So another just about a 50% drop. That is amazing. So people that bought the dip are now down 50% on their stock. I don't mean to laugh, but sometimes I have to giggle and laugh because it's so insane what's happening. And it just boggles the mind that people think this is a bottom and it's time to buy the dip. Sure, if you buy the dip and then it goes up a little bit, you sell it at the right time, a day trading type of thing, maybe you can make some money. But there's also the statistic that 90% of day traders lose money. Why? Because the big money, they see your trades, they know exactly what you're doing. And that's the reason for the ups and downs in the stock market. You know, we're in a downward trend right now, but we do see bear market bounces or dead cat bounces, bear market rallies. What they're doing is the big money, the hedge funds, the whales, they're in there pushing the shorts out of the market, pushing the little guy out of the market. Once enough shorts cover their position, then they'll let the market drop. They'll resume the drop and they'll sell instead of buy. But if they see that you're shorting and a bunch of little guys and a bunch of retail people are shorting, retail investors, the big money will come in and buy up the stock to push the shorts out of their position, because if you're shorting a stock and the price goes up, you're in big trouble, because you're supposed to buy back the stock at a later time at a lower price to be able to cover the short on the stock that you borrowed. Basically, put it in simple terms, that's what short selling is. So Carvana out, dip buys. Maybe when the Fed reverses course and starts cutting rates, maybe then we'll see some sort of a rally in the stock market that's going to last. But until then, these are just dead cat bounces. They're short squeezes. Let's move on a little bit here. The 10-year yield is plunging. We did see the 10-year yield spike back up in October, spiked up to over 4.2%. Now we see it down to 3.4%. That's a huge drop. So somebody with a lot of money is in there buying the debt. I think we all know who it is. It's the central bank. Otherwise, who would want to buy the debt? Who wants to go out and buy the debt that's yielding so little? When nobody buys it, then the yields have to rise to attract real investors. But when yields are plunging, that means somebody with a lot of money is buying this debt. Who wants to buy this at a 3.4% yield? Amazing. So they're going to continue to try to keep the housing market propped up as much as possible with these manipulation with the bond and the mortgage rates, which are connected. So we're going to see how it goes. We're going to give you some more housing news next report, and car prices. Car prices, we're going to update you on that very soon. Please come back for more updates. Thanks everybody for watching. Talk to everybody very soon. Bye for now. Keep stacking.